Welcome back. You're watching us here on Chartbusters. Now, if you've noticed that over the last few days on Chartbusters here, we've been speaking to companies that are listing post the IPO. The previous week, we were speaking to the companies, these very companies, which had opened their IPOs for subscription itself. And one of them today is Innova CapTag. This is a medical company, a drug manufacturer and exporter, makes its debut, a decent debut, one would say. While the stock listed absolutely flat, from there we saw a fair amount of demand, and as we speak, from its issue price, the stock is up almost 16%, sitting with a gain of 70 rupees over its issue price. Vinay Kumar Lohariwala, who's the managing director of Innova CapTag, now joins us to discuss the company's post-listing plans. Thanks a lot, Mr. Lohariwala, for joining in, and congratulations on this moment for your company. I remember the last week when we were talking, you did say that the prospects of the company look strong on account of a couple of things. One, your balance sheet strengthens after you've raised this money, nearly 450 odd crores is the debt on your books. Secondly, the acquisition of Sharon Bio and scalability of that is something that will do well for you. And the third thing is your new plants, which will aid your revenue as well. Let's start with the third thing first. The new plants that you're adding, what is the revenue potential of these businesses? And as a result of which, from your current run rate, what could your annual run rate look like once these plants come fully on stream?
Yeah. So, first of all, thank you for having me on the show. So, like Jammu, we are investing 350 crore rupees investment. It is strongly backed by center government fiscal benefit. And in past, if you see, like we have done the expansion in 2017 or earlier also, we have made like 5 to 6 times of asset turn in past. So this is our 350 crore investment. We are having 4 formulation block. This, independently, you can say like it's a 4 factory. We are putting in a 10-acre land this 350 crore facility. Yeah.
And by when does this come on stream? And going by your past run rate itself, this plant could add around 15 to 1700 crores in terms of your top line. By when does that happen?
Yeah. So like we have already committed most of the capex. It is already placed there in the Jammu. And we expect that it will start early next financial year.
Mr. Lohariwala, good morning. Thanks for joining in and congratulations on your listing. What are the clients that you're servicing currently? Can you share a number with us on that front? And are there any key clients, any major clients that you're looking to add going forward at the second half of the year and say in FY25 as well? Yeah.
So if you see, like we have the 14 top domestic player out of 15, we have the top 14 with us. So client onboarding is our one strategy that we keep focus on the top client, like top 50 domestic company to onboard them. And then the next is increase our product basket. So if you see like Jammu, we are putting the 3 new block, which currently we don't have the capability to manufacture. So we are hopeful that we will add the product with our existing customers. We will increase the number of SKU with our existing customer to increase the business.
All right. Existing customers is what you will engage with to increase your business. Overall, if I look at your company, say 3 years from now, what do you think could, the revenue mix of the company be in terms of regulated, unregulated markets, the product formulations that you do, and margins? What kind of margins can your company do in, say, 3 years from now, by when you would have scaled up all your operations?
Yeah. So like Innova CapTag portfolio, if you see, we are focused in domestic and ROW market. We have the capability, our cephalosporin block is EU GMP approved facility. We have commercialized product in Canada and UK market as well. So we have the regulated presence as well as the ROW, and the domestic is our stronghold. So our acquisition, that Sharon Biomedicine, there we have the 192 crore revenue last year. So that is like the most of the revenue come from the regulated market. It's a UK GMP approved, UK MHRA approved facility is there in the formulation, and the EU GMP approved facility in the API as well, right? So most of the revenue there is coming from the UK, Canada, Europe and Australia. So, if mix we see, we have increased with the help of Sharon, our regulated portfolio will increase, right?
Right, but what are your expansion plans, Mr. Lohariwala? Currently, around 10% of your export revenue is from exports. Correct me if I'm wrong here. And do you see that number increasing, and any geographies that you are targeting, that these are the geographies that you plan on expanding your operations going forward?
Yeah. So like in Ceron, we have the 192 crore revenue. Most of the revenue is coming from the export. So our business is 10% of our total revenue. Ceron is acquired first quarter end, like 30th June we have acquired the Ceron Biomedicine. From the second quarter, their balance sheet, their P&L, profit and loss account will start consolidating with our account. So that number, that regulated business or the export business of the Ceron will reflect from the second and third quarter. So if if you see on the pro forma basis, Ceron revenue is like 150 crore in export business. Our revenue is 80 crore in the export business. So totally we can say like 230 crore revenue coming from the export at a size of 1100 crore on pro forma basis.
So what I see from your
that
numbers,
will be approximately 20% plus.
Right. So from what I see from your pro forma numbers that you've given, 1250 crores is roughly the overall top line. With this Jammu Kashmir plant coming in, you could actually literally double your revenues in the next 3 to 4 years. Is that how one should look at it? And if that was to happen, what would your EBITDA margins then be in your overall business?
So like EBITDA margins, sir, if you see like we are making 13.5% approximately EBITDA margin. In Ceron, being the regulated business, we have the better EBITDA margin, like gross conversion is at 45-50%. Currently, they are making 15% EBITDA only, but with consolidation, we see improvement in that, right? And looking at the Jammu, we have a strong fiscal benefit there. Asset turn, if you see, like we made the 5 to 6 times of the asset turn in past. So we see a good growth coming from the Jammu.
Any plans on adding the higher margin specialty products into your portfolio, Mr. Lohariwala? And I just club in one more question as well. What are your current R&D costs and how do you see them trending going forward?
Yeah. So the R&D cost is like 1.5% currently what we are expending on the R&D. Looking forward, as the sales number will increase, our R&D budget, we have planned a better R&D budget. We are putting one more R&D center in Panchkula. But I think that the sales will also increase, that R&D expense can go like 2%.
Can you put a number to that, Mr. Lohariwala, and how do you plan on funding that?
So funding is already planned. We have the civil construction is already over. So approximately 5 to 10 crore more is going towards the R&D equipments. So that is the only investment left. And I think next financial year it will be ready in operation.
All right. We wish you good luck for the near future for your company and the long-term goals that you have with a clubbed, Sharon Bio business, along with higher capacity utilization with the Jammu Kashmir plant as well, and some more revenues coming in from both exports as well as the regulated markets. Thanks a lot, Mr. Lohariwala, for joining in. And once again, good luck on being listed today. And we hope to speak with you quarterly, post your numbers as well.
Yeah.
All right. With that, we'll take a short break, come back on the other side. We'll get you more on the markets and individual stocks.